What is up guys, my name is Ignas, welcome back to the channel. Today we will be comparing the dividends for two pharmacy names. As you guessed it, the first one will be CVS Health, ticker symbol CVS. Even though many companies are down on the year to date, surprisingly CVS did nicely, as the stock is up 2.94% in the year to date. 2021 was also a really good year, with the stock going from $73, gaining over $33 over the course of a year, up 45.94%. And in 5 years it loses some of those gains, but it's still up that decent 36.6%. Price to earnings looks to be reasonable, maybe a little to the higher side at 18.01, and the company is paying a dividend which currently comes at a yield at 2.05%. So as dividends are our focus today, let us go to our watch list on Google Sheets to take a deeper look. So now we are in the watch list, and this is CVS dividend yield history for the last 5 years. So by 2018 it was close to 2.5%, then in 2019 it went a bit higher to 3%, was over 3 up until 2021, and then as the price kept going up last year, we currently have the yield at around 2%. So out of this data, in last 5 years, on average CVS had a dividend yield of 2.78%. Back in 2017 it was as low as 2.37%, so 14.82% under the 5-year average. Then in 2018 it went over 3%, so 9.26% under average. In 2019 we saw the yield peaking at 3.77%, which is 35.5% over the 5-year average yield. Then in 2020 it went a bit lower but still over 3% at 3.34, so 20.04% over average. Then 2021 kept on dropping to 2.28%, so 18.06% under average. And now with the current yield at 2.05%, it is quite there under the average yield, lower for 26.42%. So looking into the dividend yield, the best time to get in was back in 2019, and there was a good period with a yield of over 3% in 2020. But with the price surging in 2021, the dividend yield kept on going lower, and we are now pretty much at the lowest level it has been in 5 years. Now if you would be interested to check into this data for yourself or add your own tickers into the watch list, you are able to do just that by following the second link at the top of the description. But now I would like to present another pharmacy name that I believe presents a way better opportunity getting in right now. And that name is Walgreens Boots Alliance, ticker symbol WBA. It's a lower capped pharmacy name, but it seems that it doesn't really move the same as CVS. On the year to date, the stock lost almost $6 per share, down 10.82%, pretty much the same in 1 year as the stock is lower for 10.9%, and looking into the 5-year history it is even worse, as the company lost almost half of its market cap, lower for 42.97%. This loss in capitalization led to a very attractive price-to-earnings ratio at 6.48, and the dividend yield is now also very attractive, 2 times higher than CVS at 4.04%. Now let's go back to the watch list to check on the yields history. So the yields for the last 5 years are in. Back in 2018 it went to over 2%, then in 2019 over 3%, in 2020 we saw it peaking almost at 5%, then there was a bit of a slowdown in 2021, but it was not major as currently the yield is still at 4%. So out of these 5 years the average dividend yield was at 3.19%. Back in 2017 with the yield at 1.79%, it was 43.94% under average. Then in 2018 we had it worst at 2.02%, so 46.73% under 5-year average. 2019 it peaked at 3.44%, so already over average at 7.74%. Then 2020 was the 5-year peak with 4.78%, so almost 50% over average. Dropped in 2021 to 3.92%, 22.77% over 5-year average. And now with the yield climbing over 4%, it is currently over the 5-year average for 26.22%. So as we saw before with CVS, buying into it right now would give us a 2% dividend yield, which is around 26% under its 5-year average. Doesn't sound like that great of a deal, but in Walgreens' case, it is 2x higher at over 4%, 26% over its 5-year average. So even though we already missed the best part back in 2020, it still looks to be a way better pick right now. Now there may still be some fear that there is an issue with those dividends. So to clear those up, we will take a look into two more aspects: dividend payouts and the payout ratio. So first one is the dividend payout. Here we have Walgreens' history of the last 5 years. So back in 2017 they were paying $1.29 per share. Then with 2018 it was increased to 1.49 cents. 2019 we had it at $1.56. In 2020 it was up to $1.69 per share. 2020 $1.80. And now with the latest quarter the dividend payout is at $1.88. So even though over the last 5 years the price fluctuated and the dividend yield increased by quite a bit, they kept on increasing the payout and did that pretty much very consistently. So dividend growth seems to be right there. Now second aspect we'll check is the payout ratio. Percentage here how much of company's earnings are distributed back to shareholders as dividends. So for WBA the payout ratio is now at 47.16%. This suggests that almost 40% of their earnings are given back to investors. So it's still not a huge percentage, less than half of what they make. And there is another interesting statistic that I noticed. They have been consistently increasing their dividends for 46 years. This does add confidence for any dividend growth strategy. And that was it. Make sure to support the channel and leave a thumbs up under the video. What do you think, is Walgreens a worthy pick right now? Share your thoughts on it in a comment below. If you would be interested in getting access to my watch list, then consider memberships. By becoming a member you will get access to Discord, where I share the Google Sheets and all the buys and sells exactly when I do them. This could be a great option to track my moves closely. Last week I did an analysis on another company, so if you would be interested in that, then click on a video that is currently on the screen. And that was it from my side. Thank you for watching and I will be seeing y'all in the next one.